Hello, I'm Chris VanHart, one of the wealth advisors here at Advent Partners, and welcome to this week's market update. According to their meeting minutes, the Federal Reserve met on June 17th, and in a move that surprised absolutely no one, including, I'm guessing, the Fed, they decided to keep interest rates exactly where they were. The target range for the federal funds rate holds steady at 3.5 to 3.75%. The vote was unanimous, 12 to nothing. You don't see that kind of agreement often. My family can't even agree 12 to nothing on where to order dinner. So why the pause? In the Fed's own words, economic activity is expanding to a solid pace. Productivity and business investment are strong, and the job market is holding up with unemployment changing little. The catch is inflation, which the committee says remains elevated relative to its 2% goal, partly thanks to supply shocks in certain sectors, including energy, with the conflict in the Middle East adding uncertainty. The Fed is essentially saying, nice progress, but we're not declaring victory, and we will, quote, deliver price stability, unquote. Over in the markets, according to Yahoo Finance, oil prices continue to fall on hopes the US-Iran deal to end the Middle East war will allow oil to flow through the Strait of Hormuz. SpaceX roared past Amazon's market valuation and briefly topped that of Microsoft, rapidly scaling the list of the world's most valuable companies. SpaceX, which started trading on NASDAQ on June 12th, was up over 40% after its first few days of trading. Now for this week's planning thought. With rates holding higher for longer, this is a genuine window for savers. Cash is still actually paying you something. So it's worth reviewing where your emergency fund and short-term savings are sitting. Money in a no interest checking account right now is like leaving a tip for the bank. Compare high yield savings, money market funds, and short term CDs or treasuries, but match the maturity to when you actually need the money. And one caution, don't let an attractive yield talk you into locking up cash you might need next month. Liquidity first, yield second. If you have any questions about how all of this fits into your financial plan, feel free to give us a call. Until then, stay invested, stay diversified, and try to enjoy the volatility. It's cheaper than buying an actual roller coaster. Have a great day.